On to the Mid-Cap Masala show. Let's get started with the first management onto the show, and let's talk about Bank of Baroda. The company did come out with its earnings. This time around, we have seen a stable asset quality, but it's the NIMs that were seen to be a bit under pressure. And, well, of course, let's now understand the outlook from the management that from here on, what sort of a growth is that the company is targeting? And to answer all of that, we are being joined by Mr. Debadatta Chand, who is the CEO and MD of Bank of Baroda. Mr. Chand, hi, morning. Good to be speaking with you. And firstly, let's talk about your margins. Help us understand, have the margins bottomed out? Because assuming that there are no rate cuts, how do you project your margins going ahead? And how much margin improvement is actually expected in Q4?
Before I answer this question, let me put a couple of points which are important for the Q3 outcome. Look, in terms of performance of the bank performance has been consistent for last 13-14 quarters. So if you look at the profitability, in terms of business, we had the strongest quarter in last 8 quarters. The credit growth has been almost at 14.7%. Domestic deposit growth is 11.1%. So in that way, we have a very balanced quarter, and whatever profit you see is purely out of the operation. There is no one-off. Saying so, coming to the margin side, let us also account for two factors here. One is in terms of CASA percentage, we are one of the top quartile in terms of 38.45. In terms of cost of deposit, we are at 4.75, which is one of the lowest in the market. So both the factors have a huge impact in terms of the margin. So if you look at the margin guidance we had given for full year, it was at 2.85 to 3%. Whereas in 9 months' time, if you exclude the Q3, the 9 months were at 2.88. That means bang on the target. But Q3 has been slightly lower than the lower range. The reason being, between the last time we spoke and today, there is a market action happened in terms of a cut in repo in the month of December. So that also, with every cut in repo rate, there is a realignment that happens on the asset and liability. So considering that, the margin for this quarter has been 2.79. But for a Q4 perspective or a full year perspective, still we are hopeful because we have more than 1 lakh of liability which is going to reprice in this quarter. Considering the cost of deposit at 4.75, I'm hopeful that we'll get a substantial reduction in the cost of, in terms of the interest expenses for this quarter. Although there will be resetting happening on the asset also. But at the same time, I think we'll be in a position to achieve 2.85 to 3%. I'll not say we're bottom out, but then clearly on the range we are there as 9 months, and I think we'll be in the range in Q4 also.
Okay, and Mr. Chand, talk to us about what could the impact of any potential ECL provisioning be on your capital adequacy?
No, ECL provisioning is a draft guidelines yet to be finally issued. Actually, there is, it has to be finally issued and then only the banks would implement that. So it's a draft guidelines point one. While the final guidelines can be different than the draft, but assuming the draft guidelines as it is on a, back of the envelope or a thumb rule basis, but there are two impacts of the ECL. One impact is with regard to a one-time impact on the capital, and another is a recurring impact on the income. So as far as one-time impact on the capital, the impact can be roughly around 100 BPS on the capital. Whereas there is another draft guidelines which talks about rationalizing on the risk weight on the credit side, advances side. That is going to give us a benefit of almost 0.4 40 BPS, 0.4%. So in that way, the net impact on the CRAR that we expect based on the draft guidelines is around 0.6%, which can also be apportioned for 5 years as per the draft guidelines. Secondly, coming to the recurring part of it, once the one-time impact is taken in the books, the recurring impact, we said that the impact can be almost 18 BPS on the credit cost. So that is the normal, the calculation agent today. But exact number we'll get to know once the final guidelines is issued on the matter.
All right, but along with that, Mr. Chand, is there any fundraising that is required to support the growth or maintain the capital adequacy? Any near-term plans for that?
Yeah, a couple of things. Our capital adequacy agent today, without taking the 9 months profit, is almost at 15.13 kind of a level. And in case I add the 9 months, then profit, then it goes to 17. So we are at a comfortable range. we have sufficient elbow room for a growth capital. So as on today, we are quite competent. At the same time, couple of things already we announced to the market earlier. It was announced to market earlier. We had enabling capital raise provision of raising almost 8,500 crore up to March 2028. That's an enabling provision. At the point of need, suppose there is a headwinds like the global thing happening. If something happens, then we may raise funds, but we will announce to the market at that point of time. The enabling raise of 8,500 is already announced to the market as on today. Secondly, in terms of the 81 and Tier 2, we had a plan to raise 7,500 crore last year. As on today, we have raised only 3,500 crore. So the spillover raise can be to the extent of 4,000, which is still available with us. So in terms of capital, it's 4,000 crore of 81 and Tier 2, which is already announced to the market. And the equity enabling capital raise of almost 8,500 crore over a period of time. Not immediately, that is what already we have announced to the market. Apart from these two, in case we talk about the fundraise, in this board rather, we have announced to the market that we intend to raise almost 15,000 crore of infra bond or a green infra bond. So that also depend upon, we have a 12 months time frame. That also depend upon the right market time, right pricing, and the need to raise resources just to back up our deposit growth.
Okay, and Mr. Chand, if you could talk to us about what is the outlook on recoveries in Q4 and the next financial year, that's FY27.
See, a recovery, actually earlier also we said our full year target is 10,000 crore recovery. We intend to put, the slippage less than that so that the GNPA improves. The GNPA is almost, it's a multi-year low at 2.04. So in terms of asset quality, I think there is a strong asset quality, as on today in terms of the overall asset quality piece. The recovery out of TW, actually, we have 800 crore recovery this quarter. Our normalized run rate, we say quarter to quarter is 700 to 750 crore. We have almost 63,000 crore of TW outstanding. So there would be recovery on that. So in that way, I'm quite confident that for a full year basis, we'll be achieving 10,000 crore of recovery.
All right, but where can we expect to see the loan book heading into FY27, and where would you peg the overall growth to be in FY26?
See, for FY26, this quarter, our growth in advances has been 14.7%, almost 15%. And this is one of the strongest growth we have for last 9 quarters. And this is also a strongest growth if you look at the overall market on the loan side for banks. At the same time, our guidance was 11 to 13%. And clearly, we are above the upper range of the guidance as far as the current quarter growth is concerned. So on a full year basis, what we are giving a guidance that will be at 11 to 13 with upside. In the sense, we'll be exceeding the 13% growth as far as the guidance is concerned. In terms of the growth numbers, if you see, without going to specific, we have a RAM growth of 17.5%. And that continue to grow at the same level this quarter also, in the Q4 also. At the same time, the corporate growth, which was slightly muted in Q1 and Q2, has picked up to 8.1% in Q3. And on a full year basis, again, we are targeting 10% on the corporate book. So if the RAM growth is 17.5% and corporate at 10%, we'll be almost in the range of 14 to 15% for Q4. But the guidance piece, we are giving 11 to 13 plus upside. So it can be 1 or 1.5% higher than the upper range of the guidance.
Okay, thank you, Mr. Chand, for joining us with your updates and sharing with us your outlook as well. So that was the management of Bank of Baroda talking to us about their Q3, which was slightly sluggish, but yes, the outlook going ahead continues to remain optimistic. Viewers, on that note, time for a very short break. We'll be interacting with more corporates on the other side, so stay tuned.